for clicking! All eyes were on Stats Canada this morning as it was set to release Canada's inflation data for the month of December, with the majority of economists expecting inflation to come in hotter than it did in November. We got our answer at 8:30 this morning when headline inflation came in as expected at 3.4%. With that said, the big news was core inflation, which came in much hotter than that which was expected. The data is definitely not what the Bank of Canada was looking for, and bond yields rose following the Stats Can release, as the uptick will no doubt enable the Bank of Canada to delay impending rate cuts.
Nothing has changed. Nothing.
Further, as we'll see, not only did core inflation come in higher than expected in December, but November's readings were revised upward, meaning inflation is higher than we thought it was.
Yeah, no Sherlock.
Yet, despite today's dismal inflation read, it's not all bad news, with the recently released Canadian Survey of Consumer Expectations and Business Outlook surveys showing that inflation expectations are coming down. So what I want to do today is go over December's inflation data, take a look at some of the year-to-date data to get an idea of where inflation is going to be over the next couple of months, and then go over these surveys released by the Bank of Canada. I do have an update coming out about the Bank of Canada's overnight repo operations, which were restarted again this week, both on Monday and on Tuesday, and we'll have that update out in short order. Click like and subscribe if you want to get that update, but for now, let's get into this inflation data. As mentioned, Canada's headline inflation rate came in at 3.4% in December. Gas prices put upward pressure on December's headline inflation rate, due in large part to base year effects, as December 22's gas prices had fallen by 13.1%. So, with base year effects, last month's gas prices had a much bigger impact on the overall CPI number. Food prices from grocery stores was up 4.7%, matching November's increase. However, as mentioned, the big news was the increase in measures of core inflation, which strip out more volatile items like food and gas, and the measures the Bank of Canada uses when deciding whether or not to raise or lower rates. CPI median and CPI trim came in at 3.6% and 3.7% respectively. Further, not only did core inflation come in hotter than expected, but last month's core inflation readings were revised upward. So, last month, on December 19th, when we thought that core inflation was sitting at 3.4 and 3.5, and the bond market dropped by 10 basis points, despite worries that inflation was remaining sticky, the CPI was actually much worse than we thought. Not only was it sticky, but it was actually accelerating.
Well, thanks for trying.
And this very much matches what we saw last week in the United States, when the US core CPI also surprised to the upside. So, in summary, headline inflation coming in at 3.4%, core inflation coming in much hotter than expected, accelerating not only in December, but also in November. So, with headline inflation sitting at 3.4 and core inflation accelerating, where do we stand heading into the spring real estate market? Where do we stand when the Bank of Canada goes to make its April interest rate announcement?
Things are looking up.
The Bank of Canada is set to make its interest rate announcement on April 10th, and many are expecting an interest rate cut at that announcement. At that point in time, the bank will be looking at inflation data released in March, looking at year-over-year inflation from February 2024 to February 2023. So how much has inflation risen just since February of 2023? If we look at the month-over-month data, since February, CPI median has risen 3.04 and CPI trim has risen by 3.14. So, if we see no more price increases between now and April, if we see no more price increases over the next 2 months, then core inflation will be sitting at 3%, give or take, when the Bank of Canada goes to make that rate announcement in April. And again, that's if prices don't increase whatsoever from now until then. Is the Bank of Canada going to cut rates when core is sitting over 3%?
This is 100%.
With that said, we do have at least some good news coming out of the Canadian Survey of Consumer Expectations, with expectations moving down, though marginally, for inflation over the next 1, 2, and 5 years. With that said, expectations are still far too high for the Bank of Canada's liking, and still much higher than they were pre-COVID. Inflation expectations, as we've talked about so many times on this channel, matter a great deal to the Bank of Canada, as if Canadians expect prices to be higher in 1 year, they will spend money now, which will push up prices higher in a year. And in addition to Canadians expecting inflation to be better over the next 1, 2, and 5 years, firms' expectations are getting better as well, with businesses expecting to raise prices less abnormally over the next year, with 26.5% planning on greater than normal price increases compared to that of 27.21 at the previous read. Not a great improvement, but an improvement nonetheless. and far less than we saw in 2023, when 48% were expecting to raise prices abnormally. And finally, wage expectations, which the Bank of Canada has said time and time again that it wants to see fall, are continuing to go down. Firms are expecting to see wages increase by 4.1% next year, still too high for the Bank of Canada's liking, but moving in the Bank of Canada's preferred direction. So, in summary, Canada's headline inflation comes in as expected, but Canada's core inflation comes in much hotter than that which was anticipated, and as did November's, but we just didn't know it.
Nothing like that will ever happen again.
All things being equal, core inflation coming in hotter than expected in December and the upward revision in November, not to mention the US inflation also coming in hotter than expected, should relieve some pressure on the Bank of Canada to deliver that April rate cut. With that said, we are seeing at least some encouraging signs coming out of the Canadian Survey of Consumer Expectations and the Business Outlook Survey. Encouraging signs, but still nowhere near where the Bank of Canada wants to see them. We should have a much better idea of what the Bank of Canada is thinking when it delivers its policy rate announcement next week, and we'll obviously have an update out on that announcement on this channel. Click like and subscribe if you want to get those updates, but for now, thanks so much for watching.